During Monday's Asian trading session, spotting gold achieved a milestone breakthrough, surging above the key $5.00 per ounce level for the first time and hitting a new all-time high of $5,093.05 intraday, further consolidating its bullish trend. The breach of the $5,000 mark in the Asian session was not driven by short-term speculative sentiment, but rather the continuous fermentation of three key drivers: central bank gold purchases, geopolitical risks, and a weakening U.S. dollar, marking a comprehensive upgrade in bullish momentum. From the perspective of core drivers, robust global central bank demand for gold has provided solid underlying support for price gains. To diversify their reserve assets, central banks around the world have continued to increase gold allocations, further consolidating gold's reserve attributes. This has also formed a buying resonance with the private sector, exacerbating tight supply conditions in the market. Escalating geopolitical risks have further enhanced gold's safe haven appeal. The long-standing dispute over Greenland's sovereignty shows no signs of easing, with the U.S.-Europe powers struggling over Arctic interests persisting, coupled with tense situations in the Middle East and concerns over global energy supply, triggered by U.S. intervention in Venezuela. Global geopolitical uncertainty remains high. Funds have flocked to gold as a safe haven, serving as a key driver for breaking through critical resistance levels. The weak performance of the U.S. dollar has further opened up upside space for gold prices, amid rising expectations of Federal Reserve easing. The U.S. dollar index has continued to fluctuate lower, stimulating global investors' demand for gold allocations. The market maintains a more than 50% probability of a Fed rate cut in March, with expectations unchanged for 225 basis point cuts in the second half of the year. The low interest rate environment continues to reduce the holding cost of non-yielding assets like gold, laying a solid foundation for its long-term strength. In the short term, after breaking $5,000, spot gold maintains strong bullish momentum, with technicals opening up further upside potential, targeting the next key level at $5,100. The daily chart shows that the 5-day, 10-day, and 20-day moving averages are in a steep bullish alignment, with prices diverging significantly from the moving averages, reflecting a short-term accelerated upward trend, though this also signals potential pullback and correction needs. The MACD indicator shows expanding bullish bars with no signs of contraction, indicating that the bullish trend remains intact. The RSI indicator has climbed to around 76, entering the overbought zone, and is moving upward in tandem with prices without forming a bearish divergence yet, suggesting lingering bullish momentum. However, the accumulation of overbought signals has gradually built up short-term correction pressure. Key short-term support levels are at $5,020 and the psychological $5,000 mark, with strong support at $4,980. Holding above $5,000 during pullbacks would sustain the bullish trend. A break below $4,980 could trigger a further decline to the $4,930, $4,950 range. Overall, the technical bullish structure remains unchanged, but multi-period overbought signals combined with price divergence from moving averages warn caution against phase-wise pullbacks driven by profit-taking. Market sentiment is relatively sensitive, and blind chasing of gains is not advisable. All content is for reference only and does not constitute investment advice. Investors should bear their own profits and losses for transactions made based on this content. Please subscribe, like, and share. Thank you for watching.